the big question. George, what is behavioral finance and why is it so important for us today in this like really hard economic time to be aware of this subject that you have dedicated your life to, my friend?
Yeah, behavioral finance. I'm going to give you the super technical, nerdy version. I'm not going to do that. I'm not a super technical, nerdy guy at all. Maybe I'm. Anyway, I think that we all intellectually understand that we're supposed to do certain things with our money. I'm supposed to spend less than I earn. I'm supposed to buy low and sell high. But it turns out that we do the opposite more often than not. So behavioral finance is just taking into consideration how our behaviors impact our finances. So it's kind of the short and sweet way to put it.
That is short and sweet, not nerdy at all. So there's a disconnect between what we know is good for us and the way that we act. What's the seed of that question?
I think the problem behavioral finance is trying to solve is closing that behavior gap. I am here, I want to go over here. Now, how do I actually make that happen? And I understand again that I'm supposed to be doing these beneficial things, but what is it that's really stopping me? Maybe take that a little bit further. Why is it that more often than not, in order for me to make a substantive change in my life, that something bad needs to happen to me, or I need to see something bad happen to somebody else? My uncle died before he was supposed to, so I went and bought life insurance. I got diagnosed, or I got diabetes, so I realized, oh my gosh, you're pre-diabetic. Now I need to change my diet. I need to start exercising. So behavioral finance really attempts to close that gap before something bad happens or before we really run out of time. So there's a lot that goes into it, but that's, I think, really fundamentally it right there.
You know, I know there's a lot of things that we do either as investors or just people in general that are somewhat just ridiculous when you think about how it actually plays out in real life. Like I was just listening to a podcast and they were talking about how, 75% of people polled believe that they are the top tier of investor out there, or, 75% of people think this about themselves when by default, that's literally impossible. Could you tell us some just, maybe interesting examples that show how there is this gap between what we think and how we act, that to show kind of like this dichotomy here?
Yeah, well, I think it's such a funny thing to talk about and such an important thing to talk about because it's so true. Like, I think I'm an amazing driver and I think everybody else is a crappy driver. That's
Right.
just not true, right? There's probably truth somewhere in the middle. And the same thing goes for everything you just been talking about. So there are these biases, we all have blind spots, and they're all real. And if I never explore and examine what mine might be, well, then I'm going to go through my entire life having them. And I'm for sure going to make mistakes. I'm going to make errors. I'm going to either not engage in planning or make bad planning decisions. I may become too aggressive because I think that I am outsmarting something. There's just a million different ways that our brains kind of play tricks on us. And I think from a starting point, we really need to, or at least I really encourage everyone, I should dig into really ourselves and do our best to understand our psyches, because we all have an operating system going on all the time, right? Just like our phones, I've got my phone around here somewhere. The operating system is constantly running in the background, right? It's doing tasks without me knowing it, which I'm grateful for, but our brains are doing that too. And some of those tasks I'm very grateful for, like the whole blood pumping, breathing thing. That's awesome.
Kind of important.
But right, super optimal. But then there's a lot of things that are part of my operating system that I'm not necessarily aware of that are hindering me and stopping me from certain beneficial actions. Perhaps you grew up in a family, Greg and Pablo, where all that y'all did was real estate investing, which is awesome. I'm a real estate investor. I think it's an amazing thing. But if that precludes you from investing in other areas, then that may be a bias of yours. If you're a gold miner, so you understand gold, and all you ever wanted to do was invest in gold, that's not necessarily going to be a positive thing for you. But I think more so we have limiting beliefs. And a lot of those limiting beliefs are about money and finances, and it's about success. If you think that money makes people do terrible things, if you think rich people are awful, well, that's going to stop you from becoming as financially successful as maybe you could be. How do you know? I would just get out a pen and paper and write down rich people are money causes. Whatever you write down, that is what your underlying belief about it is. And then once you identify it, then you can go back through and try to recognize, that's weird. Why do I think the way that I think?
You or me?
Go for it, man.
Well, I just think I think this is so true, but then I also wonder, how do you help people through this understanding? Like, to me, it's not like you go to behavioral finance, therapist, right? You don't see their shingle hanging off the side, right? So do people come to you with investment decisions they're thinking of making, and then you break down why they may be leaning towards this or why they may be leaning towards another thing? Or how do you use this to help people?
Yeah, it's a lot, right? Because people don't come to me asking me about this stuff.
Right.
They come to you and they say, I'd like to start investing, or I'd like to do this, that, and the other thing. And which makes all sense in the world, right? And that's awesome. And that's an important thing to do. I usually start off by just talking about goals and start talking about what their priorities are and things like that. And then it's a conversation about why it is that they're interested in doing those things. There are, roughly speaking, about 10% of the population that will independently set a goal and then work towards it and achieve that goal. Then there's probably 10% of the population on the other side that will never do that. They're just not in a place where they're interested in doing that. So it's that 80%, that's really where the opportunity is to start influencing behaviors. So it's listening to, or being a part of this show, or it's reading blog posts or books or whatever it might be. And then you start exploring these things. It's certainly possible, and I do go through a step-by-step process with some of my clients that will take them through exploring the operating system, looking at goals, executing, doing all those things. But the reality is we sort of piecemeal things. We piecemeal our planning. Very few of us are as organized or interested in, popping the hood and going through everything and figuring out how the computer works. We're just interested in doing things when we need them.
Interesting, man. George, do you have any kind of like categorization in your head of what kind of feeling this rental property investment sector kind of like triggers versus others? Is there anything behind that, and or like who is more likely to want this based on how they feel? Is there anything to that?
I think that there's a lot to that. I think these are the right questions to ask. And what Greg was talking about, really, you're interested in achieving financial freedom. You want to be able to eventually step away from earning income through work or whatever your priorities are of leaving money. And so I am completely agnostic when it comes to what people want to be investing in and what the asset class is. A lot of the time it's proximity. The reason that 401k plans are successful is because it's at your work. And I bet if it was rental property investing in place of a 401k, well, then way more Americans would be investing in rental real estate or just investment real estate, right? So it's just that it's right there. The barrier of entry to stock market investing is, I can buy fractional shares of stocks for dollars, right? For pennies sometimes. So it's just a function of, I think, what Greg was talking about and what you, Pablo, have been talking about is just what is it that you're trying to accomplish, and then finding the right delivery mechanism for making that happen.
Really interested right now. How can we use behavioral finance and a deeper understanding of how we are operating to make the right decisions?
Our brains are wonderful. They've kept us alive for a really long time, right? But they are not great when it comes to our personal finances. Literally the same part of our brain, the same part of my brain that responds to mortal danger is the part of my brain that responds to financial loss. So when you're walking down a dark street at night and you hear somebody behind you, you're like, run away, or you smell smoke in a building, that part of your brain that tells you to get out of there is the same part of your brain that responds when you open up your 401k statement and it's gone down by 30%. Your brain says, sell everything right now and run away, burn the computer, smash it into pieces. And I intellectually understand that's not the way that I'm supposed to do it. But man, my brain tells me, my feelings tell me, every ounce of my being tells me, run away, escape. So understanding that first and foremost, that you are probably going to feel this way, totally awesome, great, feel that way. That's the thinking fast part of our brain. But then our brains have the thinking slow part that allows us to apply that reason and logic to that. So you know what? I don't feel good about this, but I understand that the stock market always goes back up over time. So, that answers the question necessarily, but how to actually take and apply it. I mean, keeping your time horizon in mind, getting really clear on that is really important. This is where people make mistakes is we don't take risk into consideration. We don't take time horizon into consideration. If you need money, if the money that you have in your hand, you need that within the next couple of years, well, then you shouldn't be investing it. If this is a long-term thing, well, then it's an opportunity for you. I would rather have the stock market be crap for the next 30 years if we're talking about my 401k. Would you rather buy shares of Amazon at $2 a share or 2,000? Well, I'd rather buy them at $2 a share for the next 30 years. And then when I go to sell, that's when I want the shares to go to 2,000. It's a different way to think about it, but that's the proper way to think about it.